Ladies and gentlemen of the crypto space, we're live on a Monday, October 3rd at 11:32 a.m. Directionality persists until capitulation. By who is the question? Obviously, everyone's on the threshold of capitulating in some regard, including the government. They're not going to be saying anything, but there's charts all over the place that indicate there's a point where it's not about jawboning, it's not about whatever narrative that they want to present, that they will have to take action if they want social order and systemic stability to remain the case. Otherwise, you get into scenarios where you could envision literally just riots everywhere and just complete utter chaos. Dystopian thoughts come to mind if directionality persists and capitulation occurs in a variety of narratives that we talk about. So the whole art to capital management is trying to assess where we are in the cycles because everything sure as heck does operate at cycles. At some point, there's going to be a bond bid, and that would be interesting if bonds start bidding coinciding with equity markets rallying. So that would be a complete switch of at least the status quo for the last 41 years, where government debt was seen as a risk-off position, and you had your balanced portfolio or whatever 60-40 portfolios, and that might be not the case anymore. So that would be a heck of a shift in the average uh, methodology deployed by capital managers across the planet. If a 60-40 doesn't work anymore. So what does that mean? What is the safe position? How do you balance 60% risk? Where's the 40% go? What is risk off? And narratives are certainly changing, and everything is needs to adjust to the reality of the amount of debt that's in the system and the policy and fiscal response that governments around the world will have to take in order to keep the system running. For what purpose? Social order and stability. It's not necessarily about the optimal thing to do, especially when social order and stability are in question. The optimal thing to do is secondary. You can't consider what's optimal to do for the health of the system. You have to consider what's required to maintain social order and stability without having riots in the streets. This chart really tells us everything, and this isn't about, you know, there will be a bottom, not because of this chart, but not only because of this chart, but there will be a bottom in market cycles because that's what cycles are. That's the way the economy works. Interest rates are going up. At some point, there will be a bond bid, and the interest rates will top. People will start buying bonds, so that's something that people like to buy. There's a lot of debt traders that will buy that and ride up the price as a risk on position, and then bond prices will top, and you'll have the end of the bond cycle. And at some point, equities will bottom and they will start to appreciate, and there's another cycle there. And the same thing with crypto. So this is something we've talked about and something everyone always talks about. When's bottom? And that's really the narrative that I like to drive home is I don't really give a shit when bottom is. And I want to have a portfolio that's able to ride the cycles and grow over the years and be performant the entire time. So this chart is actually quite stark. But the blue line is tax receipts versus total expenditures. And it's updated quite frequently. I believe this is updated in September. Q2, I thought I saw it updated in September when maybe it was just looking at tax receipts. But when you have both charts, it's not saying when it was updated. But this is Q2 2022. So this is well, that maybe that was expenditures that were updated in Q2. I don't know. Point being, this is pretty damn recent. At least it's from 2022, and no matter what minor uh, differences there may be from the values presented here and current values, look at the delta. The delta has widened to astronomical levels. So, government will say we've taken in more tax receipts than ever before in history. Sure, but the liabilities on a yearly basis are also, well, not more than ever in history, but sure are on trend. And clearly, this is one heck of it's certainly parabolic. That certainly isn't linear. Um, maybe tax receipts are a bit linear. We just had a depressed depressed tax income in 2022, and now we're back to trend. That's actually quite interesting. If we were able to put this on like a trading view chart to get a little bit better tooling, um, you see that? Isn't that interesting? It looks a bit linear. It looks like we were just below trend with regard to tax receipts. So it looks like there wasn't enough nominal increase in price points, and the government was lagging behind on tax receipts. But obviously, their expenditures, from a fiscal perspective, are quite disturbing to say the least, because that's increasingly increasing at a very different slope as compared to income. So that means this chart basically says they got to print $5 trillion worth of debt, worth of treasuries, notes, and T-bills in order to accommodate for the difference, to finance this the spending that has already been planned. And that means someone has to buy that. So who the hell is going to buy that? We all know what's going on with currencies around the world and the energy deficit that's going on, and we want to think to ourselves, who the hell is going to buy it? So there's two thoughts that come to mind. Obviously, we could handle that internally, but now we're getting into uh, complete perversion of the entire system, and this is it's a narrative that's talked about where the Fed balance sheet just explodes, and we start financing our own debt, our own deficit spending. Um, but that's an argument that I made also, where the Fed just keeps raising rates until it basically forces the rest of the world to purchase the debt, and they'll just inflate their currency, and the dollar will go completely vertical, which will completely distort the entire system to a whole nother level. But basically, that's the U.S. straw arming the rest of the world to finance U.S. domestic deficit spending or U.S. government deficit spending. Hey, other countries, either you purchase these $5 trillion worth of U.S. government treasuries, or we're just going to keep raising rates and bankrupt your entire economies, in which case you're going to have to purchase dollars anyway, and you're just going to be running on the US dollar system, and you won't have any central banks around the world because your currencies are done, and we'll just control everything. So that's kind of makes a lot of sense if you think about how the mafia would handle it, or how anyone with a position of strength could be a dick about things and try and force the rest of the world to basically finance our own deficit spending, and that's what these dicks are doing, really. And that's what this chart says that they'll have to do. Either the rest of the world voluntarily purchases our debt to finance this deficit right here, or somehow, we handle it internally, in which case it's just status quo shit that we've seen in the crypto space with regard to fancy monetary policy and printing, and the same stuff that the government does is what we've been experimenting with in the crypto space, which is why we have a bit of a hands-on feel for what historically was a very opaque system, because we've seen tokenomics do things like that, and we've seen hyperinflationary deaths of currencies in the crypto space, definitely more times than we've seen around the world. We'd have to look through history to see the hyperinflationary deaths of currencies, but look, almost everyone on the stream can point to at least one cryptocurrency that has experienced hyperinflationary collapse. And obviously, we can point to other failures of implementation, debt implosion, liquidation cascades all over the place, and obviously the biggest one was Luna, where they the steady lads deploying capital, and we see literally countries, the Bank of England, and big commercial banks literally saying, hold tight, they're intervening in the currency system. Japan did it. The Bank of England did it. That's exactly what Do Kwon did. And he obviously doesn't have the weight and might of a military, so he wasn't able to sustain it. So these countries have sustained it for at least a period of time. How successful they'll be going into the future is another story. But they have intervened, and they have told everyone, steady lads, Japan and England are deploying capital. Dan's in the house with a couple of questions, and these are ever pertinent. And I'll obviously remind everyone how I manage the inevitable capitulation and the cycles of the markets. And these are good questions to start that part of a conversation. Are you farming any assets with your stables? No. I am grateful to have the stables that I have, and it's not enough stables to actually do anything meaningful. I consider it a bit of a savings account. I have bills and expenses that I know are either planned or coming, and I like to have that cash. So that's the way I treat that part of the portfolio. And clearly, you have to have cash outside of the crypto space as well, because there's a risk associated with stablecoins. So you need to be diversified in that regard. So I'm doing nothing with my stables, and nor do I really plan to. I would need such a large rate of return that I don't want to take that kind of risk. You know, not going to get much. I get if I tried to put risk onto my stable position, I wouldn't get nearly as much as I make literally just sitting and doing nothing with a base V curve position. So why do anything? Why take the risk with what I potentially need if these economic conditions continue to get worse, which is very much a valid narrative. There is absolutely no reason things can't continue to get worse. There's no reason that capitulation needs to be what everyone hopes it is going to be. What happens if the Fed does exactly the narrative I just said, where they just keep raising rates and collapse the economies of other countries, which basically forces other countries to print, to buy dollars, to buy $5 trillion worth of debt this year and next year and the year after, in which case the dollar goes to 120, 130, 140, 150, 200, and other countries are just very, very weak. And that becomes the new norm. So that's why I'm not really doing much. And I'll continue to elaborate on how I mentally handle this type of environment. But Dan's next question is interesting because we're getting to some interesting prices. Or a bow. What am I thinking of their ecosystem? It's the only other federation that has really gained any traction. There's not as much growth as I would like to see, but that's understandable for market conditions. But it does have a bit of that reflexivity that we've seen with the Curve Federation, so that is still observable in not only the price action, but just the behavior of the tokenomics, and I think that is interesting. So let's take a look at Aura, because VE-BAL still isn't there, which is quite concerning. But Aura is still quite productive, especially as the price of Aura continues to come down. It becomes relatively increasingly productive because there's still a fair amount of capital being deployed to hit in hand. And we look over at the Llama Air Force, we'll take a look at the dollar per VL Aura, which is about 6 cents. Week 7 was about 6 cents. Week 6, 8 cents. Week 5, 7 cents. So it seems to be relatively stable, which is interesting. I mean, obviously, if there's 1 cent on 8 cent volatility, is a fair amount of volatility. But what's pertinent, it doesn't look like it's in a death spiral. It looks like if if additional Federation participants emerge in the coming months and years, then this has the potential to be what the Curve Federation is, where there's a federated group of participants that are accumulating the emissions of Balancer as well as Aura, which produce the sustainability attribute, which is the deflationary pressure on those inflationary emissions, which have been commoditized. And the voting incentives is what drives the disruption of those emissions, creating that deflationary pressure. People are removing those inflationary pressures from circulating supply to capture the capital inflow associated with the incentivized returns. So this is just an example of commoditized inflation, which is exactly what the Curve Federation achieved. They're in very much a more nascent stage. They were off to a better start as compared to the Curve Federation, but no doubt the Aura, Balancer, system is going to evolve very differently than the Curve Federation, specifically because the Curve Federation became what it is organically. There was no expectation for this narrative that I've talked about over the last months to occur. There was no expectation for this to occur. It's just what occurred, and we're just analyzing it in hindsight. What the hell happened? And in hindsight, it's really a spectacular story from a technical perspective, as well as from a narrative perspective. And that's where Aura and Balance are heading. But because we have the history of Curve, it's not that Aura and Balancer are just organically becoming something we don't understand. We have this comparison we can make to what occurred with the Curve Federation. So it's quite fascinating to see the subtle differences, the nuances, the governance quarrels that are occurring, and frankly, the lack of VBAL is somewhat consistent with what how long it took for V Curve to really catch a bid with regard to productivity. So Aura is interesting. I would love to see $1, just literally capitulation, and that would be very interesting to see. There's nothing to sell. Aura produced more money than I ever put into Aura, and now if he could catch at $1 or less, you're talking people are just giving up, and that would be interesting. If I'm going to take anything in this type of market, I'm going to catch something that people are giving up on that I think still has legs, which means it's mispriced, and it's getting there. Another 50 cents off Aura, and I think people are going to be like, I'm done, and that's capitulation, and that would be good to see from my standpoint. Buck 04. You see this tag, a Buck 04? That's when my eyebrows going like and I'd be considering something. Let's see what else is on questions, and I'll tell you guys how I'm handling the market as always, and what else I'm interested in. Because NFTs have gotten a little bit more interesting to me lately. Maybe that's just out of boredom, but they're just fun. Especially the games like Gods Unchained. Greetings from Portugal, Encoder. A pleasure, a pleasure. Sir Joe in the house. The big twat's in the house. Aha. Love you guys too. I appreciate all of you. You guys give me a sounding board. You guys are my therapy that I have every once or twice or hopefully 3 times a week when things get better. So interesting with Bank of Japan and Bank of England situation waiting for the ECB. Is it an inevitability? Intervention and yield curve control are contagious. That is something we know is the case. Great to catch you live, Ratari. It's a pleasure. Assoon sitting on my hands in Ethereum, USDC, Uniswap pool. Listen, market making, just as you said, Dan, is interesting. Now, bear in mind, I like UniV3 market making. As compared to Curve for market making. Curve facilitates optimal swaps. It's a different type of position. It's much more passive, but you could get a little aggressive with concentrating the liquidity on Uniswap v3. The complexity is it actually profitable considering gas fees? But you could get into Arbitrum and look where else Uniswap v3 is deployed. But you really need the volume. So Ethereum USDC has caught my eye, and I've played around with it a little bit. It's just not productive enough for me to really want to hold a position. Like I just value having the extra cash that much more. Um, but what you want from a market making position is you want the chart to be going horizontal, dip down, so you can have stables. So your dollar cost averaging in the position. So you're just literally putting USDC into a Uniswap v3 Ethereum Ethereum USDC position, and it buys on the way down, and then Ethereum goes up, and you're capturing the volatility the entire time, and then it goes back up, and you're back in cash. But the entire time you capture volatility. So it is interesting and still quite tempting, depending on market conditions. Maybe you catch a bid on Ethereum a little bit lower, but it should go up in the coming years. I mean, how many people are still on the stream? 22 people that don't think Ethereum is going to be higher in 5 years' time. It won't go down and then back up to at least where it is currently. Let's find the Ethereum chart. I mean, what? Capitulation bottom 800, 600. So if you pop some USDC in here below the 50, the 50 SMA in the monthly, and dollar cost average is in 800, and markets collapsing, chaos is in the streets, fire and brimstone start raining down, and the Federal Reserve opens its golden doors, and some magical creature runs out saying, "We're going to save you." And then Ethereum starts to go back up, and you capture the transaction fees of insane volatility to the downside and upside. And by the time Ethereum is back at 1220, you have all USDC again, and you've captured all that extra cash. And that's what Uniswap V3 position offers from just a pure USDC perspective. You can literally just put USDC in there and capture the volatility on the way down, on the way up, and then you're back to cash. So it's not really that you're interested in an Ethereum part of the position. You're interested in the volatility of that particular pair. And that's exactly what market makers are trying to capture, the volatility. So that is interesting. Um, let's keep it going. Good morning, Asun. Thanks for the inside restables, Dan. Hope that helps also, because market making is interesting. We didn't have any of this shit in years past. This is all brand new since the end of 2019. So that gives us a lot of stuff to consider. We still have opportunity overload in this market currently. The complexity is a lot of our free capital has been completely obliterated. But can you imagine? There's a lot of folks that have huge amounts of capital outside the crypto space. They're like, oh, this is what you could do. You could be a market maker. So that's plenty of reason, all the reason in the world for capital to come in. And our perspective is quite biased, having been in the market for these last couple of years and having to compare to our all-time high. But as prices keep going down, it's like yields on bonds continuing to go up. As the yields continue to go up on bonds, it's like at some point they're going to catch a bit, because who's not going to want 5, 6, 7, 8% on 10-year bonds? Oh my. Or even less. Like if you go to what is it? The notes with 1 and 2 year notes. I think the 1 year is a T-bill, and the 2 years 2 to 10 is notes, and 10 and higher is treasuries. I don't know, whatever, semantics. Not even semantics, but just the way people talk about the market. Anyway, so if you could get 5, 6, 7, 8, 9, 10% on risk-free, it's going to catch a bit at some point. So that's the same thing here in some regard. Clearly, it has a different narrative, and risk-free is not necessarily applicable the same way as bonds. But at some point, it just goes so low that capital's like, all right, I have to buy it. It's so damn cheap. So that's kind of where I'm at with a couple of assets. Ethereum, I'm just holding. It's a long-term position I've had for quite a while. And Aura is interesting if it gets to $1 or below. And that's really about it. I told you guys briefly ago about that HXRO position. That just set and forget. That's just sitting. That's very nice. I'll talk more about what I'm working on. Let me hit some more comments though. Tapsy's in the house. Rupert, a pleasure. Crypto and web startups, pretty cool. Mike C, what's the $1.04 equivalent for curve? Oh, so what's the bottom for curve? Let's go out to the monthly. So we're sitting at about 90 cents. You know, look at the capitulation we had back here in December of 2020. You know, we could easily see a retest of the lows. You know, let's say, you know, if this is trend, I mean, the cheaper you get, you're just betting at this point on the narrative either being real or false. Because was it going to go to 40 cents and it's a 50% drop from here? But it's everything with regard to upside is unlimited, depending on if the narrative is real. If the narrative is real, there's unlimited upside, and it's extraordinary the amount of capital, nominal capital, that has been introduced in the system. And do we think there's going to be less capital in the system in the coming years or more capital? I mean, as Jeff Snyder talks about, there's been horrible disinflation in euro dollars, which are not real dollars, but synthetic dollars. But the whole point is they count towards the amount of dollars in the system that are accessible in one way or another. So how does the government get out of this current disinflationary crisis? There's a currency disinflationary crisis. We're on the threshold of a debt deflationary crisis, and you'll see the debt deflationary crisis emerge when credit dries up. If you can't get credit and you can't roll over your debt, then you can't service your debt. So if you got like 1% interest rate on a $100 million loan, and your term's up, and you got to roll it over for 4 to 6%, that's a 400%, 600% increase in servicing costs. You think this planet has a 600% increase in productivity, in amount of sales? No, it's horrible. So there's no way the system can handle the rolling over of debt for multiples higher monthly servicing costs. When the ISM just rolled over less than 50, it's in contraction. So this is why they'll probably be fearful of of uh, of GDP numbers that come back lower, and this is exactly why Raul looks at ISM to front run GDP contraction. If the orders to manufacturers are coming in smaller and smaller, that's going to foreshadow a decrease in gross domestic productivity, which will also foreshadow a decrease in tax receipts, which means where the hell are they going to get the income to accommodate expenses? So that's part of the story that all leads us to this chart where they have to force $5 trillion worth of uh, deficit financing down the throat of the rest of the planet. And then we also have to consider that they can't, in which case we enter unprecedented territory where the Fed's balance sheet is going up extraordinary numbers. Loki, a pleasure. Um, so, Mike, for Curve, I don't have that situation with Curve because under no circumstance am I even thinking about additional position. Although I am curious about what happens with Yearn's curve, was a YV curve, and then they're gonna make it Y curve, which is pretty cool. So um, I just don't have enough capital to warrant a large enough position. I mean, maybe if you have a ridiculous capitulation event to the downside, um, it'd be interesting to see curve at 60, 70 cents. But stay along trend, maybe a wick below. But a wick below in the monthly, you can have a big wick below down to 50, upper 40s, and then it closes above trend. So that'd be very nice to see. I don't see anything here that disrupts the narrative. Price action alone doesn't disrupt narrative. Meaning, is it doing what we think it's doing? And the protocol is doing what we think it's doing. It's financing liquidity. It's drawing in the incentivized voting, obviously mostly at the convex layer at this point, but there's still a fair amount of capital incentives available at the base VE curve layer. So it's functioning exactly as the narrative says it should be functioning, the curve federation. And that's quite extraordinary to say the least. And just price action alone does not invalidate a narrative. Um, so the cheaper you get it, that's the answer, Mike. The bucko for equivalent. The cheaper it is, the cheaper it is. And then you want discount. You want discount on cash flow. The cheaper you could buy $1 per week in revenue, the better. What are your thoughts on a GLP position versus a tri-crypto or unipool? I don't have time or patience really to fight over positions. So I know a lot of people, especially in Discord and even more so on social media, are still trying to outperform in this kind of market. This market will take outperformance and hopes of outperforming and take it out back and shoot it in the head. Vast majority lose in these market conditions. It's a zero-sum game, fighting over the amount of liquidity that's currently being retained in the system, which is an extraordinary observation. Let's go over to DeFi overview. $54 billion worth of, let's go to stables overview. $148 billion. So you see there's still liquidity draining. 2% down on stables this week. You're fighting over the amount of liquidity in the system. So it's a zero-sum game where market actors are trying to get an increasingly large quantity of the same quantity of stable coins. So it's people just fighting with each other, just trying to carve out a piece. So this is an extreme adversarial type of environment. Buying anything is likely to depreciate. Doing any activity in this market is best suited for trading, long, short, market making, DCA in, capturing volatility. That's what Henry says. The only thing to really do in this type of market is to capture volatility, which interestingly is exactly what market making is wonderful at doing. You have a capitulation to the downside, you're going to get a tremendous amount of transaction fees. You can get a serious wick buyback on people that are getting in the discount, transaction fees, and then eventually, whenever market cycles turn, you're going to be back in dollars anyway. Transaction fees. And that's literally just the Uniswap V3 Ethereum USDC position, which is quite interesting. So you don't have to dive into the risk that the market offers to try and outperform. In fact, that might be the simplest way to just perform. And that's something we talk about on the stream all the time, is not trying to outperform, not trying to make more money, and just trying to perform and find a sustainable way to engage with this insane market and peer through the madness. And that actually is quite interesting, and I'll probably talk on that more. Just Uni V3 market make a position to capture the vol to the downside and back up to the upside again. What about market making at the top with the crypto to DCA out as price increases? Well, that works as well. But that's if you want to exit a position and you're interested in capital gains and you're averaging out a position. So that works as well. It's not something I really like to do. Every position I want to have, I want to produce income in perpetuity. So it's definitely a methodology that many people should consider. Uniswap V3 is very useful in that regard. Crypto and web startup. Yearn developed a new Y curve. Yes, I do like it. And what does like mean? Am I interested in deploying capital? Probably not. Do I need to deploy capital? Probably not. What will they end up doing? They'll end up disrupting circulating curve supply. Let's see here. Let's take a look. I haven't looked in a couple of days. Let's see how the VE curve chart is doing. And as expected, you get your bump and curve. So we're getting our discount in price. That's just what counts for the discount. And what we'll want to see is this continued divergence. At some point, we'll probably see a market actor take a big chunk out of this depressed curve price because it's now at a discount. And that should be the trend. Because look what happened back here. We had the curve bump to the upside, and then someone took a big chunk out of it, which obviously drops down the circulating supply of curve and bumps up VE curve. But look at the divergence at this point. And we had it back here too, but the divergence is increasing. As the curve discount becomes available, it's more likely than less to get snatched up and locked because it's happened 1 and 2 times in the past. Really 1, 2, 3 times in the past, you have a nice rip in circulating curve supply disruption, a decrease in liquidity. So that's a period of time right about now. So the question probably is when. And do you want to front run it and stuff like that? And I don't know. It's not something I'm even thinking about doing in these market conditions. You got default risk all over the place. You got literally giant mega commercial banks just like screaming risk. They're not talking about default if you look into the data like a lot of people have done, but they're screaming, yeah, these banks are fucked. They have way too much debt, and the interest rate rises means when that debt rolls over, it's going to put a huge amount of pressure on cash flow because now the interest rate is significantly higher, so the cost is significantly more amount of monthly servicing or monthly cost to service the new rolled over debt obligations. It's horrible. Um, One Curious Views in the house. Killis is in the house. A pleasure. Hope everything's well. Soon, this position has been so stress-free compared to what I used to do. When I started to do the concentrated liquidity, it was game over. Concentrated liquidity uh, is adversarial because you're going to think about when do I get out, how do I adjust the liquidity, and that is a methodology that I try and avoid. Mostly I think nowadays, in terms of how do I structure a portfolio that will survive, is going to expose to the volatility, protect what you can to the downside, and have assets so when upside occurs, you're catching the Pico bottom. And that's what we have. That's what I have. I have a structured portfolio. I have cash flow. I have carved out cash from the cycle, the previous cycle, from all-time high. Wish I carved out more, but that's okay. And next time I hopefully should do better. And there will be a next time. There's always a next time. But do I have enough cash to get through the next 1, 2, 3 years? Sure, because I got income, I got a job, I have assets that produce cash flow, and it's all sustainable. So now all I need to do is sit back, wait, digest, understand, shitpost, and let the market do what it's going to do. Because when that bottom hits, I'll be very happy. And if that bottom takes a long time to hit, and there's another 50% off all these assets going to come off, okay, it is what it is. It is what it is because I'm not buying. It's a very different presentation to people trying to get into the market. I know a lot of people may view the stream and they're trying to get into the market, but look at where you could potentially be. That's the story I try and tell you, how I engage with the market now, and that's your destination. Well, you don't have to think about is it going up and down. I want to care about something merely surviving. And if it survives, where do you think it's going to be in the coming years? One rule of thumb I've come to appreciate. Making money doesn't come because of doing extra work. Necessarily, what was it called? Rotating, being a rotator. Um, how many times during the cycle between 2020 and late 2021 did we say, oh, we wish we did less? And we probably would have made more money if we didn't rotate and didn't try and outperform the market. How many times? You know we've said it. You remember what you guys did. And we've talked about this before. Less is more. I mean, literally, isn't that an age-old statement? And I think that's more important than ever. And I think I always take things to the extremes. I am an extremist. That's why my portfolio management methodology is extremism 101. Because that is something we've all experienced. If we didn't sell and didn't exit that position, we would have done better. I'm pretty sure all of us have a capacity to see that we've done that. Um, make money every day, half ETH, half USDC. Pretty much that's what market making is. I will admit you need some size, but optimism and others help with that on the smaller portfolio. Sure, Arbitrum and optimism are cool, and ZK Sync is coming up, which is pretty interesting. Damn, that divergence between curve and V curve is an interesting chart. Will be very interesting to see how that goes moving forward. Well, look at the split. This is since January of 22, uh, everything changed. I mean, this is a story. This chart right here is extraordinary from a story perspective. For it to be in this position, there is more illiquid CRV than there is available to be purchased CRV, and there's very barely any inflation since July 22 to now, 3 months. Curve 542, 42 is 30 mil. 1, 2, 3, 4, 5, 6, 30 mil. A 30 mil increase on top of 5 bill, something like that. or 30 mil increase on. So it's relatively small compared to the history. Look at the increase in curve circulating supply as compared to now. So there's been obviously a steep um, decreasing parabola. This is disinflationary. That is a disinflationary trend line right there. So that's extraordinary to say the least. Any thoughts on PTP gauges and bribes? Okay, yes. Let me explain what I have often explained. It's the same story. It's all about federation. If you need to see that other protocols, not humans, other protocols are purchasing whatever, VEPTP, and locking it up and removing circulating supply. That is the hallmark for federation, and that I would argue is the most important thing to observe if there's any long-term potential for what's occurring. Now, it may start slow and it may build up. So if it starts slow, there's an opportunity to be in early, but you need to see those protocols start to consume, not just people. It needs to be protocols. So just remember that before you really think about taking size, a position of size, like, oh, this is hot. It's hot if other protocols are purchasing under mandate because they have to buy it in order to succeed at what they're doing as a protocol individually. Frax needs to buy a curve. They all need to buy a curve. All the protocols that are hoarding and accumulating curve need to keep buying it in order to maintain their protocol's functionality. So Curve facilitates the functionality of all the federated protocols. Joshua, it's a pleasure. One curious view. How many people outperform HODL BTC in the bull run? 3,000 to 20x. So Bitcoin went 20x from the 3,600 to about 67. Let's say 20x, give or take. Well, I did. Um, Obviously, no one's very few lucky people are still at 20x on the portfolio. If it wasn't for Luna, damn Luna. It's like an Andre. We got Luna. We got Andre. So I'm not at 20x anymore. 15x give or take. That's pretty cool. But not many people outperformed HODL versus BTC, so that's interesting. Now I can't appreciate the Bitcoin narrative from a financial management perspective at my size. And I'm not going to digress too much into that story, but the Bitcoin narrative really is for the mega whales, and I think that that is a solid narrative for people of Michael Saylor's size. Um, Hope that helps. Let's look through a couple of charts. I'm going to wrap it up for today. Let's look at the total liquidity. So another couple of percent came off net liquidity. This is Arthur Hayes' somewhat famous liquidity indicator. Which is Fed balance sheet minus reverse repos minus Treasury General Account, the TGA. And he interprets that as the amount of liquidity available in the system to chase risk. And obviously that has been coming down significantly. I don't know the significance of the trend lines on the chart because it's not really an organic chart. It's not like there's people trading this. But that might be interesting because there is a little bit of history with regard to the 200 EMA, the white line. 200 SMA is the golden line, but this is subjective, or the directionality and behavior of this chart is based on the subjective choice of federal regulators. So I wouldn't take too much out of the moving averages or the trends, but I would take a lot out of directionality when you start to see this go up and produce higher lows. That would be heading more of a risk favorable environment. So this is obviously a risk adverse environment. It's not heading in the right direction. Hope that helps, boys and girls. Monday, October 3rd, 12:15 p.m. As always, thank you all for joining. Tell everyone to subscribe. Can't help anyone if they don't listen. But you know the deal. After party on Discord for the most rational community in the entire crypto space, where if you're in there, we at least have a chance to do better. I wish you all a good day. I'll catch you later this week. I'll see you then. Peace.